All right, guys, welcome to Crypto Price Alerting, the home for the average investor. Yes, us, the average investor, everyday Joe Schmoes and Jane Does. No! Tonight's lesson, guys, is about TA. That's technical analysis in cryptocurrency. All right, let's go. Let's go. Exactly what is technical analysis, TA? Technical analysts work with a different approach when it comes to trading. The core idea behind technical analysis is that historical price actions may indicate how the market is likely to behave in the future. Technical analysts try to find out the intrinsic value of an asset. Instead, technical analysts look at the historical trading activity and they try to identify opportunities based on exactly that. These things can include analysis of price action, as well as volume, as well as chart patterns, and the use of technical indicators and many other charting tools, which you get right here at cryptopricealerting.com. We give you all of these tools for you to do your technical analyzation of the market and of the coins that you are interested in investing in. The goal of the analyst is to evaluate a given market's strength or weakness, a given coin's strength or weakness. With that said, technical analysis isn't only a tool for predicting the probabilities of future price movements, it can also be a useful framework for risk management. Since technical analysis provides a model for analyzing market structure, it makes managing trades actually more defined and more measurable. In this whole context, measuring risk is the first step to managing the risks. This is why some technical analysts may not be considered strictly traders. They may use technical analysis purely as a framework just for their risk management in their trading. The practice of technical analysis can be applied to any financial market. That means the regular stock exchange market, forex currency trading, as well as cryptocurrency. Among cryptocurrency, it is widely used amongst the traders. But does technical analysis actually work? Well, just as we mentioned earlier, the valuation of the cryptocurrency markets is largely driven by total speculation. And this makes cryptocurrency an ideal playing field for technical analysts, as they can thrive by only considering the technical factors. So, when you're investing in the regular stock exchange, the Dow Jones and the S&P and stuff like that, you will fare more well by doing fundamental analysis, right? So you need both. You need fundamental analysis and technical analysis, but fundamental analysis, the fundamentals will serve you a lot more well in the regular exchange, the regular investing. Fundamental analysis ain't gonna do you too much in the crypto space because it's way too volatile and it's largely driven on speculative things. And as far as news events and all that type of foolishness, it definitely ain't gonna do you well in meme coins and stuff. You're gonna need technical analysis, and you're gonna need cryptopricealerting.com, which is the tool that you will use to be able to measure your risk management and all of your speculative things. You'll be able to manage your volume, the chart patterns, all the technical indicators are at cryptopricealerting.com. All right. That was a quick one, guys. A little short summary of technical analysis. All right, now, DYR, do your own research. CryptoPriceAlerting.com is the tool that will alert you and teach you at this channel on YouTube, and sign up for our Patreon, and we will teach you all the inside terms, trading, indicators, everything, and you have the alerting system for you to make informed trades, guys. All right, another one down. We love you. See you guys in the next video. This is not financial advice, guys. Remember, love the Most High, y'all. We out. Lego.